Honestly, looking back at the last 12 months, it feels kind of surreal. I set a goal to go from zero to having a $25,000 investment portfolio in exactly 1 year. And spoiler alert, I actually did it. But here's the thing, I'm not a crypto bro, I didn't dropship cheap products from China, and I didn't get a small loan of $1 million. I'm just a regular guy from Canada who figured out that our banking system has a literal cheat code that most of us are using completely wrong. So while you watch some Minecraft gameplay, I want to break down exactly how I built that 25k portfolio. We're going to talk about the specific amount you need to open, math behind it, the grind, and how to stop inflation from eating your lunch money. First off, I just want to say I'm just a guy on the internet playing games. I'm not a financial advisor, so don't come after me if everything goes wrong. Do your own research. But seriously, the reason I made this video is that I see so many people my age thinking they need to be day trading or buying NFTs to make it. The truth is, the way I saved $25,000 wasn't through magic. It was through being incredibly boring and aggressive with my savings. We are going to cover 5 sections of how I got to $25,000 portfolio and talk about the things like the Canadian cheat code, like the TFSC, what I actually bought inside of it, and the lifestyle changes I had to make to stack that much cash in 12 months. So, grab a seat, sit back, and let's get into the logic of getting rich slowly. Okay, let's look at the numbers, because $25,000 sounds like a massive mountain to climb. If you're standing at the bottom looking up, it looks impossible, but you have to break it down level by level. To hit 25k in 1 year, you need to invest roughly around $2,083 every single month. Now I know what you're screaming at the screen. Bro, I don't even have that much money, or rent is like 3 grand. I get it, I really do. When I started this, I wasn't making 6 figures. To hit this number, I had to treat my savings like a bill that had to be paid. I picked up extra shifts, I did some freelance work on the side, and I stopped buying stuff that I didn't need. But here is the unfair advantage you have if you start young: time and compound interest. Even if you can't hit 25k in year 1, the habit is what matters. If you start investing just $100 a month when you're 20, by the time you retire, you already have more money than the guy who starts investing $1,000 a month when he's 40. When I first started investing, my main goal was to hit around $25,000, so the compound interest could start doing the heavy lifting for me. And now that I'm at $25,000, hopefully I can get that $25,000 to $50,000 or even $100,000. I don't know. Now, you might be asking, where do you put the money? If you are a Canadian and you aren't maxing out this account, you are literally playing the game on hard mode for no reason. I'm talking about the TFSA, the tax-free savings account. Here's how it works. You put money in, you buy investments like stocks, ETFs, or whatever. Those investments grow, and when you pull the money out, no tax gets deducted. They take zero, nothing. If you make $1 million in your TFSA, you keep $1 million. Now there is a limit. You can't just dump $1 billion in there, but the limit depends on your age. So if you're roughly 22 or 23 years old and you never opened a TFSA, you probably have over 30,000 or 40,000 of contribution room sitting there waiting for you. This is how I was able to stuff $25,000 in there in a single year without getting penalized. Okay, so you might be asking, where can you open a TFSA? So I opened my TFSA using a simple app called Wealthsimple. You can use whatever you like, Questrade, whatever bank you use. I personally like Wealthsimple because it was the first thing I started using and they're really reliable. Once the money is inside the TFSA, you have to actually buy something. Don't just let it sit there as cash. I kept it safe. I just bought index funds, specifically ETFs. I basically bought the entire stock market. For Canadians, there are great all-in-one ETFs, things like XEQT or VEQT. These are one-ticket solutions. You buy one share and you effectively own a tiny piece of thousands of companies across Canada, the US, and the world. Or if you just want to bet on the American economy, you buy something like VFV, which tracks the S&P 500, the 500 biggest US companies. But it trades in Canadian dollars, so you don't have to worry about converting your money. My strategy for the whole year was pretty boring. Every time I got paid, I transferred money to my TFSA and I bought more shares of these index funds. If the market went up, cool, I made money. If the market went down, cool, I bought more shares on sale. I removed the emotion from it, which I think a lot of people struggle to do. A brief pause on the investing stuff to talk about defense. In Minecraft, you don't fight the Ender Dragon without armor. In real life, you don't invest without an emergency fund. Before I reached this 25k milestone, I made sure I had a safety net. I kept about 3 months of expenses in a high interest savings account. In Canada, look for banks like EQ Bank or Wealthsimple Cash that actually pays you 3% or 4% just to hold your money. The big 5 banks usually pay you close to 0%, which is pretty insulting. Having this cash meant whenever I had problems like my car needed repairs halfway through the year, I didn't have to sell my investments to pay for it. I paid with my emergency fund and then rebuilt the fund. It stops life from ruining your streak. The hardest part of this year wasn't picking the stocks, it was the lifestyle. To save 25k a year, you have to wage a war on yourself. Usually when you make more money, you spend more money. You get a raise, you finance a nicer car, you get a bonus, so you buy $400 sneakers. I had to say no to a lot of things this year. The real flex isn't a Gucci belt or a leased BMW. The real flex is having 25k working for you while you sleep. It requires sacrifice, but honestly, watching that number in my TFSA tick up from 5k to 10k to 25k, it gave me way more dopamine than any purchase ever could. But yeah, that's pretty much it. Open a TFSA, check your contribution room, buy low-cost broad market ETFs like XEQT or VFV, automate your contributions, and most importantly, keep your expenses low so you actually have money to invest. I know 25k sounds like a lot, but even if you only hit 5k this year, you're lapping everyone else who isn't doing nothing. But yeah, thanks for listening, and I'll see you guys next time.